Ladies and gentlemen, good day, and welcome to Hindustan Aeronautics Limited Q4FY22 earnings conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities. Thank you, and over to you, sir.
Yes, thanks, and good afternoon, good evening to all the participants, and thanks for joining in. We are here to discuss Hindustan Aeronautics Q4 and fiscal 22 results. With us, we have today Mr. R. Madhavan, Chairman and Managing Director, Mr. C.B. Ananthakrishnan, Director of Finance of Hindustan Aeronautics. So without any further ado, we hand it over to Mr. Madhavan for his opening remarks. Over to you, Mr. Madhavan.
Thank you, Abhijit, and welcome, and good afternoon to everybody for joining us today. I suppose you have read through our presentation that we have already uploaded to the site, and as you can see, we had a large number of major achievements this year, and we had a good financial figures also at the end of the year. And some of the things that has already happened between what we uploaded and today is that we did get the DGCA clearance for Hindustan 228, so we have got the type certification. And rest of the projects, as we have indicated, is going on as projected. And in all probability, by July, we will be opening our Tumkuru factory. And from there, we will be also flying out the first LUH aircraft. So let us hope that the coming year also is as good as it was for the last year for us. And before ending this, because I don't want to take a long time in the intro because we are already late for some time. So let us go straight to the question and answer sessions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Aditya Priyadarshi from Skill Ventures. Please go ahead.
Yeah. Go ahead.
So, when I was looking at your manufacturing revenue, it has been one of the lowest in the last 5 to 7 years. So just wanted to understand why has there been such a decrease considering we had considerable order book in manufacturing, excluding Tejas also. And how do you expect this part of the revenue to move in the next, say, 1 to 2 years? And can you please specify the number of aircrafts you are planning to manufacture for next year, the various platforms that you have for LUH, LCH, ALH, etc.?
Yeah, coming to the manufacturing task, because as we have been telling that we are at the fag end of the projects that we already have, that is the orders that have been placed on us. So we expected these numbers to come down. And if you remember last meet also, we were saying that these numbers will come down, but we'll also make good by increasing the spares and MRO support activities. So that has improved. If you look at it, that's why the total top line has gone up. So this has come down to 36 aircraft this year and 41 sold. So that's how it is. 44 sold. So that is the number that is there. And next year, it will be slightly less, but that should not affect us as far as the revenues are concerned because other part of it, that is from the ROS side, it is increasing, so we should be able to meet that. Secondly, as you said about your pending orders, that is, you are talking about LCA. LCA kicks in only in 2024. So that is next year, that is 23, 24, it is not there. The only order book that we have for that is, of course, LCA trainers are there. That is, we'll be liquidating this year and partially next year. And we have the LCS order for 15, which will be liquidated this year finally. And we are expecting a small order of 12 LUH also to come in. So this also should be done this year and next year. So this is the lines that will be operational, along with certain balance items of helicopters from Army, Coast Guard and Navy.
Right. So just wanted to understand, this year we had completed sale of LCA 10 number and only trainers are left. And so now the LCAs are not going to be there. So, and the manufacturing revenue is also now around 7,300. So is it possible, is it going to be difficult for maintaining this sort of revenue because the LCA had a higher sales price for these helicopters?
No, because we do have the LCA program still going on. So we will be meeting the revenues, absolutely no issues on that. 7% of LCA, but then we have got your helicopters project still going on. And LCH is one which is coming up in larger numbers because this year we'll complete the 15th order. And we also have some Dorniers and other ALHs coming up. So we will get the number of aircraft ready for them.
Thank you. We'll take a next question from the line of Viraj from Securities Investment Management. Please go ahead.
Hello, am I audible?
Yeah, of course.
Yeah, hi sir. So I just have three larger questions. First is, the Defense Acquisition Council has approved acquisition of 150 for LCH, and we have received so far 15 orders. Now similarly, they've also approved acquisition of 180 to 190 LUH, and we just got around 12 orders so far. So at what stage we are in terms of balance of orders, and are these orders a certainty in terms of you will be getting them, or it's depending on Army's budget, or there are some other factors? So if you can just elaborate on the timelines for that. Second is, in the third import list, the import of Navy naval utility helicopter has been restricted. And earlier DAC had approved the acquisition of around 100 NUH. So where are we again in terms of getting these orders? And is the ALH Navy version ready to satisfy this demand?
Yeah, now your question is in two parts. One, regarding both LCH and LUH. The numbers that you quoted is correct, and it will happen. There is nothing like it will not happen. So the only thing is the procedure involved is that the first they will give you a limited series production order, that is for 12 LUH and 15 LCH has already come in. After that, they have some time for utilizing this, and any changes if they require, they have to bring it in. Generally, it is 1 year for that to happen after we supply the first aircraft. And in this case, they may do it a bit earlier because they are in a hurry to place the orders also for the larger numbers. So if that happens, then the balance of the aircraft, which is already cleared by DSC, will be put up for the RFQ. So the process is long, but it is there, and we are trying to improve that on the timings for the placement of the orders. Now,
based on your experience, would that be in 23, 24?
At least 2 years it will take.
Okay.
So,
on naval?
Of course, time limit given between AON to CC sanction as of now is 9 months. But we don't because that 9 months also, if it happens, the armed forces will take some time for the evaluation of the LSP order aircraft. So that will take some time. So at least 2 years is what I expect it to happen in. It's not a bad timeline if it is done at least within 2 years. The next thing that you talked about was the Navy utility helicopter. Yes, we have come to a conclusion, and the QRs for that has been almost finalized by Navy. They are yet to give it to us, and once it comes in, we have already discussed with them the possibilities of converting the existing ALH for the NUH use. And initial orders that they are planning to place is for 40, followed by the balance numbers as per the NUH program requirement. So that is also going on at fairly good pace. And we expect that we finalize on all the specs in the coming couple of months.
Just one question. In 2019, the Indian Army had issued a request of information to acquire 114 jets. So just want to know what is the current status of this, and is HAL expected to supply these aircrafts which is LCA or ANCA or platforms, or there's a foreign supplier?
The LCA was not in that list. And secondly, that question should really go to the Air Force rather than to us.
Any update in terms of where exactly it is and what stage it will be in?
We know as much as we know about it. That's it.
Okay, I'll come back in queue. Thank you.
Thank you.
We'll take a next question from the line of Venkatesh Subramanian from Logic Tree Investment Advisors. Please go ahead.
Yes, sir. Good evening. I have two questions. I just wanted to check with you in terms of margins. If I look at the EBITDA margins as well as PAT margins for this year, obviously apart from considering the other income, the income tax refund, broadly this is probably the best margins that we have had in a very long time. Are these margins sustainable in the future? That's my first question. Second question is the current 82,000 crore order book that we have. What could be the execution time frame for this approximately? And can you kind of give us a ballpark figure on what kind of order flows would you expect this year?
Yeah, the order part of it, I'll do it. After that, Mr. Ananthakrishnan will answer on the margins part of it. Okay. As far as the order book position is concerned, we did get a order book of around 25,000 crores this year, additional. So out of which it is basically the repair and overall part of it is there, and the 15 LCH. These 25,000 crores will be liquidated within the same year. That is this year, we will be liquidating it. As far as the balance of it, which is basically relates to LCA order, LCA Mark 1A order, that will start getting liquidated from 2024 onwards for the next 6 years. So that is the liquidation plan for that other part of it. And you asked what is the expected increase in your order book position. That, of course, as we have been discussing earlier, is basically the biggest part which we have not discussed till now is on the aircraft engines, both for Su-30, which is 240 numbers, and for RD-33, that is for MiG-29s, that is for another 80 numbers. So this order, together between these two orders, is more than 33,000 crores worth of order placement is imminently due for that, for this coming year. Other than that, of course, the two helicopter programs, we are expecting that the orders will flow, and that definitely will not happen within the coming year, but it will happen in 24, 25 or sometime around that. So that is the order book immediate positions on that. Of course, there are some other orders which is there and which is in advanced stage. One is on HTT-40 for somewhere around 1 billion, that is around 7,000 crores, less than 7 billion. And there is also a likely order for a top-up requirements for the Su-30, that is around 12 numbers. These two are in the process as of now, so this is the order book position that is we expect between the next couple of years. As far as the margins are concerned, Mr. Ananthakrishnan will...
Yeah, good evening. The question which has been asked, the margin part of it, the current margin, we have been maintaining this margin for the last 3-4 years. It is not something which has come up in the current year. Of course, the one abnormal income which has come up in the current year is on account of this pricing sales, the differential sales as we call it, which has added to our margin. But notwithstanding that, we have also created a certain amount of provisions towards our LCA change order 3, which is around 1,000 crores, and similarly for IJT 270 crores. It is after creating these provisions and after offsetting this abnormal income, still we are maintaining this margin of around 26%. So we are sure that the current year also our margins, EBITDA margins will be somewhere between 25 to 26%. Because the profitability remaining the same, all the other parameters remaining the same, we will be in a position to continue with this margin in the current year as well.
Sure, sir. That is very helpful. Mr. Madhavan, just a last one, sir, which is when we look at the top line growth over the last 5 years, we are at 6.52% in terms of top line. Next 5 years, would it be better than the 6.52, sir? Can we hope for better times?
We are expecting it to grow up, and by 2025-26 and beyond, we are looking into double-digit growth.
Excellent, sir. Thank you so much. I'll join the queue. Yeah.
Thank you. Our next question is from the line of Madhura Nancy from O3 Securities Private Limited. Please go ahead.
Good evening, sir. I have two questions. One is how much of the revenue is from MRO dependent on the import from Russia? Are there Chinese supplies coming for spares from Russia? And the other question is, other than engines, are there any major components which are directly imported for Tejas aircraft? Do we import anything from Russia for Tejas?
Let us start with the first one. That is the Russian dependence for MRO support. And we get around 6,000 crores worth of sales revenue through the Russian platforms and their support systems. So we get around 6,000 crores there. As far as the supply position is concerned, it's a bit fluid, but we don't expect any major problems for us because we do have carrying some inventory on that, which we'll see through for about 6 months of our production now. And beyond that, since our payment lines are now more or less open, so we don't expect that we'll face any problem in supply of spares. The Russians have already confirmed that once the payment lines are open, they will supply the spares to India. So we are in a relatively good position as compared to other countries as far as the spares supply from the Russian sources are concerned. As far as LCA is concerned, there is no Russian parts as such, except one part which comes from Ukraine. Okay, that we have an alternative source also available with us. So it should not affect the LCA production line. So other than that, there is nothing Russian in the LCA. So that should not be a matter of concern for us.
Okay. In addition to the same first question on the supplies, are we thinking of adding any alternate new vendors for it?
Yeah, we are already in the process of indigenization and alternate vendors for many of the platforms, not only Russians, but wherever we are dependent on a foreign country, we want to get it from Indian source. So we have a full setup for doing that. And we have also earmarked some money for the indigenization and development activities. So that is 5% of my profit goes into that part of it. Along with our own design, this one, your corpus that we created, which now we have increased from 10% to 15% of our profit. So because our future lies in how many things are there from our own stables, that is our own design houses. So that is why we are increasing that part of our profits. We are putting it more and more into design and indigenization activities. So not only the Russian platforms, but also from any other sources that we, even for LCA, we are getting lots of items from abroad. So that also we are indigenizing it. Every year we have an indigenization targets which we are keeping it so that in future we will are less and less dependent on foreign sources for any of these materials.
Okay. Thank you. Thank you so much, sir.
Thank you. We'll take a next question from Harshit Patel from Equirus Securities. Please go ahead.
Hi, sir. Thank you very much for the opportunity. Sir, my first question would be our order intake on ROH and spares. Sir, this year we have done almost 230 billion rupees of order intake on this front, which is a very sharp growth from FY21 levels. So, sir, could you explain what exactly has happened over here? What are these platforms for which we have got these huge orders? And what is going to be our order intake trajectory for ROH and spares over the course of next 2 to 3 years?
When we talk about our order book position, we only account for 1 year of ROH task, because that is a firm task that is available with us. We also know 2 years in advance also how much is going to be the next 2 years worth of repair and overall task. But for our order book, we always put only those orders which are firm and final with us. So we use only 1 year of ROH task when we are projecting 82,000 crores. There's only 1 year's worth of it in that. So, and that is immediately liquidated in the coming years. So that's how it works. So yes, as we have told earlier also, the ROH component will keep increasing, because as and when the number of aircraft produced by us is increasing in the fleet, they all will come for repair and overhaul. So that always it's on a higher trajectory that you will get the repair and overall going up. Especially Su-30, which is now more than 270 of them are in operation. So yearly task is also increasing now. Last year we did a record 21 aircraft, but sold 20 aircraft after ROH, and this is likely to go up. Of course, yearly there will be slight variations here and there. Sometimes a dip, sometimes an increase, but it will be around 25 aircraft is the average that the Air Force is projecting. So there will be an increase. Similarly, there is an increase in the engine tasks, especially for the same Su-30. We are increasing from earlier 65 numbers. This last year it was around 80 numbers, 85 numbers for 22-23, and it will grow up to 105 numbers. So these are the areas where the ROH keeps increasing. And there was a bit abnormal last year because I think there was some pending repairables left with the Air Force and Army, so that must have come in. So otherwise, this will keep increasing and should not be an issue as far as firm tasks are concerned, because they always project 3 years task, out of which 1 we take it for our order book position, and remaining 2 we provision for it for the next 2 years.
Understood, sir. Thank you for a very detailed update on that. So my second question would be on our execution of LCA old contract. So that I believe by now all the FOC execution would have completed, and we would be left with only trainer orders, right, sir? Would that be a right understanding?
Yeah, that is right. We have already finished the production of all aircraft. Deliveries, 2 numbers are pending because that is for the customer to pick it up from us, and I think 1 is already under collection, and the another one will be collected very soon. But the production part of it is completed, so there is nothing pending from the IOC FOC order as far as the fighters are concerned. There are 8 your trainers are pending, so that will be taking up this year and next year, 4 each, both the years. So that my production line is also up and running till such time that the 83 order starts coming.
Understood. Sir, similarly on the LCA front as well, since till last year we did not get a confirmed order, I believe we would not have booked the sales, right? All the sales for all the 15 units will be booked in FY23 only. Would that be a right understanding?
No, we booked 3 numbers last year. So balance will be booked this year.
Okay, so
Mr. Patel, sorry to interrupt. May we please request you to return to the queue? There are several participants waiting for their turn.
Sure. Okay, thank you.
Thank you. We'll take our next question from the line of Anshul from Care Portfolio Managers. Please go ahead.
Hello. Yes. Okay. Am I audible?
Yeah, very much audible.
So yeah, sir, I just wanted to understand that after the Tejas, we would start recognizing in revenue from 2025 onwards. So do we expect to maintain those margins as well, considering the 10% limit of government on Tejas orders?
See, we are slowly getting into the 7.5% margin. For the last couple of years, and we have not seen any dip in our margins. Did you? No. So we don't expect that will affect us as far as the margins are concerned. So margins are dependent also on the efficiency and the way we execute the project. So 7.5% profit margin will not really be effective for us. And secondly, the major part of my income also is my revenues are also from the ROH front, where the margins are not really being contracted. So if you look at it, we don't expect much change in our profit margins after the LCA 81 kicks in.
Just to add on to what our CMD has told, the 7.5% margin is only applicable in case of new manufacturing contracts, which means that platform deliveries wherever it is there. In case of repair and overall, the existing 10% keeps continuing. And as of now, even with that 7.5 and then 10% combination, we are still able to make an operating margin of around 17%, 16 to 17%. So these operational, we have already identified areas where this reduction in this margin of 2.5% on only manufacturing contracts, which constitutes around 40%, which effectively means that 1% of the margin will have an impact. which we have identified areas where we should make good so that we maintain our operating ratio as at around, operating margin at around 16 to 17% and EBITDA margin at around 25%.
Thank you. We'll take our next question from the line of Nikhil from SIMPL. Please go ahead.
Hello, am I audible?
Yeah, we are audible.
Yeah, sir. Just two questions on the P&L. One was on the employee cost. Across the last so many quarters, our average employee cost was around 1,000 crores, which jumped to 1,400 crores. So, is there some one-off of 400 crores in this quarter, or should we consider this 1,400 as the base for future? Just if you can help me understand that. And secondly, sir, there is one impairment cost which we have taken in the P&L. So, what is that? And if we adjust for the provision, excess provision we have taken, still the provision as a percentage comes to 10% of sales, which was earlier 6 to 7%. So, is there some higher provisions even after that one-off provision we have taken?
No, yeah. Your first question on the manpower cost. The manpower cost towards the last quarter, normally it will be on asset because we keep making many PRP that incentive provisions and other bonus provisions which we will have to make for both officers and employees. So naturally it will be on the higher side, but on the overall it will be as compared to last year there has been a 7% increase in the employee cost. As compared to the last year, that is 2021. And in terms of the overall manpower cost to revenue, in fact, it has come down from 20% last year to almost 19% in the current year. So, in fact, 3 years back it was 24% and consistently it has been coming down, and today it stands at 19%. And our endeavor is to bring down this manpower cost further down to our target is to reach at around 16% by 24-25. Which will so that the next year also the manpower we expect by another percentage point to come down. This is on the manpower cost. And as far as your second question is IJT license. Yeah. Second is on the impairment. The impairment is on account of this license fee for the IJT program which we have paid, which we have kept it in intangible asset. So we did not, since it has been existing for more than 5 years, and we did not foresee any immediate output from that, we have made that impairment, and that is towards the IJT program. The third one is
on the provisions. If we adjust the one-time provisions in the notes to account, still the provision comes to almost 10% of sales.
Yeah.
Versus we call 6 to 7%. So, is there still some higher provisions we have taken even after that one-time adjustment?
No, this is, there are certain elements which we have taken on the higher side. One is the replacement and other charges for which we have to create a provision. That has gone up by around 500 crores. Basically because that the additional provision which we will have to make towards the delivery of the aircraft, which we are yet to deliver with some modification and with some addition of LRUs which we will have to make, we will normally create a provision for that. That is almost, it has gone up by 500 crores basically because of this, for Sukhoi additional LRUs which we will have to give. And similarly sometimes we do take the loan items also from the customer when the items are not immediately available, which we will have to replace it back to the customer. So towards that another 150 crores are there. So like this, there has been an addition on towards replacement and other charges of around 575 crores. And warranty provision, again, it has gone up by 189 crores when sales goes up, and when the warranty period is, after the contract, when it is applied, when the platform sales are more, the warranty also goes up. That is another 200 crores of warranty provisions are been added up. Apart from this, as I have already indicated to you, the LCA change order 3, which is a one-time provision, this is also once we are going to finalize the contract and the change order is approved, we will get back this money. Then on account of that, it is another 1,000 crores. So all this make up to an addition of around 2,100 crores overall as compared to the previous year, out of which we are sure of getting back this 1,000 crores of change order, and this LD also of around 300 crores. We are also trying to extend the delivery schedule. We are trying to get the contract amended towards this LD. So mostly portion of this LD also we should get it back. So this 2,200 crores is on account of these broad categories.
Thank you. We'll take a next question from the line of Aditya Priyadarshi from Skill Ventures. Please go ahead. Mr. Priyadarshi, we request you to please rejoin from a different number. We can't hear you clearly.
Hello. Am I audible? Hello. Sir, can you specify the amount of revenue that you generally receive from manufacturing of engines, which form part of our manufacturing revenue, and how has the trend been, and what kind of revenue do you expect from sale of such engines in the next few years, since you have recently signed MOUs with Safran and Rolls-Royce?
Just hold on a minute, because the revenues for engines are from two sources, rather three sources. We'll have to just combine all those figures and let you know that. Can we take the next question? We'll come back on that later.
So just one more question. So we are guided for 6% revenue growth for FY23 and 24, but with this one-time revenue which we received in Q4, our revenues have come better than expectations. So we still expect our revenues to grow by 6% from this higher base?
Yeah, definitely, because this year we had a revenue growth of 7.5%. So for the last 3 years, the CAGR has been what we are expecting it to happen, and it should continue next year also, at least by 6%.
Manufacturing revenue for engines, that is the Sukhoi engines, it's around 1,500 crores.
Thank you. The next question is from the line of Tejas Shigwan from Magad Capital. Please go ahead.
Hi. Good evening, sir. Just wanted to understand, you have granted the type of certification of first indigenous light transport civil passenger aircraft, Hindustan 228-201. So can you please elaborate on this?
No, we got the type certification from DGCA just recently on Hindustan 228. Okay. This is our own version of the Dornier 228 with lots of modifications, including the engines, the propellers, display systems, everything has been changed. And then we have gone with our own modifications, and we are renamed it, since the old aircraft wasn't anywhere near to this, so we have renamed it as Hindustan 228, and we have got the certification. This now we are trying to place for the UDAN scheme. Already it has started in one northeast area, so we expect that now we'll get more market for civil utilization of this helicopter as well as for exports.
Okay. Got it, sir. Got it.
Thank you. Our next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, I just have one question on the ROH revenues. Just want to understand, that how often does an aircraft or a helicopter need repair? I mean, is it after every flight, or there is after a certain duration the repairs and everything is required?
No, it is not like that. See, after every flight there is a daily inspection called DI for this. That other than that, we do a full repair or a full overall happens after a long period of time of probably around, depending on the utilization. Of course, there are two conditions under which it gets utilized. Typically, let us say if it is 2,000 hours and 10 years, something like that. So each aircraft has its own life and its own utilization rates. So depending on that, it comes for full overall, and there will be some because of, let us say, bird hit or FOD or any other damages. Sometimes it comes in between for a repair, but otherwise, full overall generally happens somewhere around 8 to 10 years, and some cases even up to 15 years.
Thank you. We'll take a next question from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, thanks for the opportunity, sir. So you said first, on the HR cost, which is around, say, 19%, we expect to reduce it 16% over the next 2-3 year time frame. So what are the initiatives that we have taken and how that will really play out? So if you can give little more color.
Yeah. See, there are two things that's happening. My employee costs are not increasing at the same rate as my revenues. You can
Hello.
see that. Can you hear me?
Hello. Yeah.
Hello. Can you hear me?
Yeah, sir.
So what you can see that the revenues grow at a much faster rate than the employee costs. Employee costs are more or less at a stabilized level, and it is likely to come down because we are not inducting new people as of now because we are downsizing ourselves a little bit to come to a situation when we are around 22 to 23,000 strong as compared to 26,000 as of now. So the employee cost will definitely be at the same level or maybe reduced, but the revenues are increasing. That is one part. Second part. Good afternoon. Welcome back to the call. We just got disconnected, so can we continue from the place where we left off?
Yes, sir. You may continue. Mr. Bharashit is still there on the line.
Yeah. So we are talking about the manpower costs.
Yeah.
So we were talking about the increase in revenue versus the increase in the manpower cost, which is not at par. So the manpower cost generally comes down as a percentage. Secondly, we also said what is the other plan is that we are now more and more into outsourcing our activities, keeping only the final assemblies, the design development, final assemblies, and the delivery of the aircraft with us. So what has happened is that my own manpower requirements have come down. So with the reduced manpower, I can give a better revenues with the support of all the vendors in the line. So that's how we are trying to reduce the manpower. Generally speaking, in our line of business, about 16 to 18%, in some cases up to 20-22% is the norm. So we like to bring it down to 16%, or maybe around 16 to 17% will be the ideal situation for us to be in.
Thank you. We'll take a next question from the line of Venkatesh Subramanian from Logic Tree Investment Advisors. Please go ahead.
Yeah. So just a quick question on the 40 naval utility helicopters that you mentioned, which probably we will get an update in the next few months. What could be the approximate order value of that, sir, and what would be the execution time frame for that one?
It all depends on the configuration. See, the helicopter part of it will be a standard cost. So depending on the time of delivery and the equipment that Navy will be asking on us to provide. So that's how it is going to be decided. Initially, we may not even be able to put a ballpark figure to that because some development cost also is involved in that.
Okay. Mm-hmm. Okay, right, sir. Other one is about the 15 LCH orders. And are you getting any more LUH orders, new orders in the pipeline?
This after this initial order is executed, that will happen this year. Then they will take some time, probably a year's time before they start the activity for the main order. The main order is generally around 140 odd aircrafts are pending, 142. So they will start actioning for that. So that's why we said we expect the order placement not before 2 years from now.
Thank you. We'll take a next question from the line of Jyoti Patankar from Quest Investment Advisors. Please go ahead.
Hello. Am I audible?
Yeah, you are audible.
Sir, what would be the percentage of ROH going ahead and the margin in the same?
Yeah, ROH percentage, we expect it to be around 55%, 50 to 55%, depending on the induction which is happening at the aircraft side, from the IAF side. And as far as the margins are concerned, the margins for the overall margins will continue to remain at around 16 to 17% operating margin will be there. And ROH and the manufacturing contracts, it will be 7.5% as per the pricing for profit policy for which we have got with the customers, IAF and Army, and 10% in case of ROH program. But because of internal efficiencies and better bargaining with our vendor, we are in a position to operate at, we maintain our operating margin at around 16 to 17%.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Mayank Chaturvedi from Equirus Securities. Please go ahead.
Hi, thank you for the opportunity. Sir, my question is on our ALH order book. So how many numbers of ALH are still in our order book left unexecuted, and what numbers will we be executing in FY23?
So the present order for Navy and Coast Guard is That is around 9 numbers. And that includes, of course, the Army also. So that's not many left out for this year. That is 9 numbers are left out. But there is other orders which we can start working on, but the order is in the pipeline is for the 25 ALSs from Army. So we will start the work on that. So that we are able to supply that helicopters the moment orders come in place, which we expect that will be done very quickly. The RFQ is already out, so we should expect that to happen within this year.
So how many numbers of ALS will we be executing in FY23 then overall? And what?
As of now, firm number is 9.
Talking about ROH.
ROH or
No, ALS. Not ROH.
New one is around 9. But this will go up depending on the possibility of getting the new fresh orders in place.
Thank you.
This is only ALH, yeah.
Our next question is from the line of Mihir Manohar from Carnelian Asset Management. Please go ahead.
Thanks for giving me the opportunity and congratulations on a good set of performance. I wanted to understand the Tejas Mark 1 order which is there. I mean, how is it progressing? Wanted to get an update on that. And second thing on the margins front, I mean, we are having regulated margins, but I mean, we are struggling, at least I am struggling to understand, I mean, how are we having such good margins at the EBITDA level? So if you could, clarify these 2 points, that will be really helpful.
The first part of it is that LCA, that prototype, all the items are already in and it is flying already now. The prototypes are flying now. Today itself it has taken a flight now. So that is going on as we have planned. So that within another maybe 1.5 years we will be ready with the type certification of all those systems on LCA Mark 1A. Margins, I think we have given this answer quite a number of times, so of course, Mr. Anand Krishna will continue with that.
Yeah. Margins, as what I was, sometime back I was referring to the manufacturing. Just to add on the margin front, I mean, there were some more explanations on the margin front. Before I just would like to apprise you on the pricing policy, what HAL has got in respect of our repair and overall activity and for the supply of spares. We have got a fixed price quotation as what it is known, where the base year verification is done and subsequently for the subsequent pricing period, which could be as long as 7 years, the parameters, financial parameters are fixed, and then based on the financial parameters, we keep getting the prices revenue generated. But what happens in the process is that once we get the base year verified and the subsequent pricing parameters fixed, as we progress, if suppose we are able to achieve better operational efficiencies, both in case of material and as well as in case of labor by way of learning curve and way of improved productivity in case of labor and way of better margins with our vendors in case of material, once we give a long-term visibility, with the benefit which accrues to HAL, we retain within HAL till the next pricing period is through. So during this period, the increased profit is being retained by the HAL, and that is one major reason why this operating profit and then it remains at around 17%. And in case of manufacturing contracts, again the same thing is there. Since for bigger orders we get better visibility of our product, and also because of the learning curve benefits which we get accrued to us in terms of the labor cost benefit which accrues to us, and the material cost, once we negotiate with the vendor, we always negotiate for a longer period and we get better margins over there. So these improved operational efficiencies help us to improve the margin from what minimum which we are getting as per the contracts to what we are actually achieving in terms of our year-on-year profitability.
Thank you. We'll take a next question from the line of Harshit Kapadia from Elara Capital. Please go ahead. Mr. Harshit Kapadia, could you unmute your line?
Yeah. Are you able to hear me now?
We can. Please go ahead.
Yeah, sir. So just wanted to check with you, sir. So the 230 order which was supposed to receive in this quarter is now been delayed towards the end of this financial year. Is that correct understanding?
No, 230 order is being discussed. Even yesterday also we discussed on that. It's going on, but Yeah, probably by the end of the year, we should be expecting something on that.
Okay. And if you can give an update on an export order for the Malaysia, when is it okay getting to finalize? Any clarity on timeline would be helpful.
No, what we will say that is we are attempting to get into an export order from Malaysia, Philippines, and other places like that. But unless it is finalized, we will not be able to tell the timeline either, because it is dependent on them to place the order now. We are definitely shortlisted, so once it is declared by them, probably we'll be able to tell that.
Thank you. Our next question is from the line of Kenil Mehta from Omkara Capital. Please go ahead.
Hello. Sir, can you provide some details on your recent signing of MOU with Philippine Aerospace?
We have signed an MOU with Philippines Aerospace and Defense, one organization there, which is also a government of Philippines undertaking organization. We have done that to set up an MRO facility in Philippines, train them, and probably go for even up to a level of D-level maintenance there. This is something new for them, and this will be useful if and when our platforms gets inducted in Philippines.
Okay. And sir, what was the reason for decreasing our working capital in year-on-year basis? It was decreasing from 20,000 crores to 16,400 crores. Due to better efficiency in receivables or due to lower inventory requirements from IAS?
Because on account of two reasons, one is on the debtors and the other one is on the inventory. Debtors, we have brought it down from 90 days earlier to almost 69 days. And on the inventory front, we have last year it was some 266 days, and this year it has come down to 230 days. So the current assets have come down, and that is one reason why the overall working capital requirement also has come down.
Thank you. We'll take a next question from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
I just want to get update on our export initiative, that what we have and how do we see over the next 3 years, and which are the geographies that we are expecting export.
Yes, see, we started the export activity in earnest only about a couple of years back when we have our own platforms to sell. It's not something that we are making under license or anything like that. So once it is there, and we do have it now in all categories, whether it is transport aircraft, whether it is trainers, whether it is fighters, that is LCA, or if it is helicopters. So we have got a wide range of aircraft to offer to for exports. As far as geographies are concerned, the first attempt we did was with Malaysia, which is going on fine as of now. And then we are looking at Indian Ocean region countries, that is Malaysia, Philippines, Indonesia, Vietnam. That is one area that we are looking at. And the other area that immediately we are looking at is the MENA countries, that is Middle East and North African countries. So there also we are looking at your countries like Egypt and others who are likely to be our customers. The third area that we will look after these two is in the LATAM countries, but that is not immediately in our radar as of now. But these two areas definitely we are looking at it. Some smaller countries with smaller requirements we are already fulfilling, and that will continue to be there. But if you look at it, the immediate ones will be, if you want it in numbers, it will be Malaysia, Vietnam, Philippines, and Egypt, if it is possible.
And so taking on this export, how is our competitive strength, and how do we really position vis-a-vis these established global players? And what are the chances that we get a preference over there? How do we manage that?
Yeah, this is a very good question for us also, because see, product your specifications and uniqueness, we are there, and we have worked against a global tender for in Malaysia, and we have been doing good there. Price wise, we are definitely better off in most cases. But my unique selling point for our sales is that we provide a ROH and an MRO support within the country wherever we are going to operate. And it's not a sell and forget type of business that we are looking at it. So that's why we are setting up, as somebody asked me a previous question on Philippines, we are also setting up in Malaysia, we are also trying to set up in Egypt and other places. So first thing that we have to do is that what is that you are differentiating yourself from what the established players are doing. They do a lot of negative marketing as far as we are concerned, but the thing is, somewhere when you enter into this market once, then your product and its serviceabilities are proven, and that is where we are trying to prove that we are better off than the other OEMs who are in the market.
Thank you. Our next question is from the line of Anshul from Care Portfolio Managers. Please go ahead.
Hello. Yes, sir. So I just wanted to ask what is the manufacturing capacity for Tejas every year? How many pieces can you manufacture?
We are now running, as of now it is 8, but we are running for 16 when the 83 LC order comes in. And this can be ramped up to 20 if it is so required, if the exports also come in at the same time.
Okay, understood. And sir, what is going to be our dividend payout policy going forward, considering that there has been a reduction overall to 29% from, I guess, 40% a couple of years back? So sustainable dividend payout policy?
Excuse me, I couldn't get the question.
So are we planning to maintain this kind of a dividend going forward as well?
Dividend, it depends on the year to year. This year we did give a dividend of 400%. And it depends on the profitability of every year, so definitely.
And there are some DP guidelines on the dividend also, which you should be, I think probably you may be aware, which says that 30% of the PAT or 5% of net worth, whichever is higher, should be the minimum dividend payable. So which means that at least 30% of our PAT or 5% of net worth we'll keep paying every year. That will be the minimum amount. And over and above that, we are, in fact, it is our effort also to improve the dividend so that the profitability is shared. Of course, keeping in mind the various R&D programs which we have to fund it ourselves, and also the capital expansion which, if in case, we have to fund ourselves. So keeping these two R&D design development programs and capex requirements, we will keep distributing the dividend, and that will not in any case be less than this two DP guidance which indicates the 30% of PAT or 5% of reserves of net worth.
Thank you. Our next question is from the line of Venkatesh Subramanian from Logic Tree Investment Advisors. Please go ahead.
So I just wanted to check on this 15 LCH orders. What is the value of the order, sir?
3,000. Not much. It's 3,142 crores.
Okay, that's it, sir. Thank you.
Thank you. Next question is from the line of Aditya Priyadarshi from Skill Ventures. Please go ahead.
Hello. Audible? Hello.
Yeah, audible. Please go ahead.
Just wanted to understand, does the rising commodity prices have any impact on the margins of HAL? And what kind of steps does HAL take to combat this inflation? Do we enter into any long-term contracts with suppliers, or the HAL takes over the higher cost? So just wanted to understand how do you tackle with this rising commodity price scenario?
I didn't get that question.
No. Yeah. Now that wherever we have got the contracts signed and wherever we have got the ROH programs, very clear programs, tasks are being issued, we are also aware, we do the procurement planning and also consequently enter into LTPS with our vendor. So the LTPS will also provide for the various indices which will take care of the escalation parameter. And back to back, we also have the escalations protected with our customers by way of these pricing parameters which is being fixed for the base year, and based on the data, based on the verification of data, they also fix the pricing parameters for the subsequent years within the pricing period. So both the ways, since the escalation is also being taken care of by the customer as well as whatever is being given to the vendor, and incidentally in respect of ERV, since majority of our products are imports, so the exchange rate variation which comes through, that is also being reimbursed to us by the customer on an yearly basis based on the cutoff date. The cutoff date keeps varying from project to project, but we have got that ERV cover also, it is there. So we effectively, unless that there are big variations between what we are getting and what we are to pay to the vendor, that incidentally it has not happened in the past. So that much of protection is there, so back-to-back coverage there for us.
Thank you. Our next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yes, thanks for taking my question. Just to clarify, I think some of these numbers were discussed earlier. Target of production for FY23 is 40 aircraft?
FY23, no, we said 40. 22, 23, we said 40.
40, right? So I'll just break it up if I caught the numbers rightly. It will be 4 Dornier, 4 LCA plus 2 trainer, 6 LCH and 4 LUH plus 20 ROH for Su-30, right? Broadly?
No, the ROH for Su-30 is not counted into this because we are talking about only Cathay, that is your fresh manufacture. And 40 was what we gave for 22-23. 23-24 we didn't give that number.
Yeah, 23. I was referring to that only, 22-23 only. So 40.
22-23 we had a sale of LCA. LCA 6 numbers. ALH 9, LCH 3, we have produced 9. And engines were 6 for AL, and upgrades were 4 Jaguars, 9 Mirages, and 3 Dornier MLUs.
Right. And what about the ROH? I mean, what's the number of ROH you are looking at? Sorry, I missed that number.
Last year for Su-30.
Right.
So we also look at aircraft and helicopter total overall numbers, that is ROH numbers, as 246 this year. That includes Su-30, then Jaguars, Mirages, Kiran, Hawks, Dornier 228, Averos, ALH, Chetak, Cheetahs.
Okay, right. And with this, the 6% top line guidance over and above 22, right? As in 21, 22.
Yeah, that's the expectations.
Right. And what about 24 revenue guidance? Did I miss it, or you said it's 6% or it's 12 double digit? What did you mention for 24?
I told 6%.
Okay. For 23 as well as for 24, the revenue guidance is now 6%.
Yeah, you're mistaken. That is C23-24. That is FY23-24.
Right.
It is 6% over and above 22-23, which was 24-620.
Right. Got it. And just to understand this Tumkuru facility now phase 1 and
phase 21-22. Correct. Let me correct it. So we will have a 6% growth in the coming year as compared to this last year. That's what I want to tell you.
Right, but nothing of 23-24 you mentioned, right? You didn't mention 23-24.
No, we didn't mention that.
Okay. So 23-24, your earlier guidance was double digits, so you're sticking to that guidance in absence of any new guidance.
That is for 25-26 onwards, not before that.
Okay. Got it. And for just to understand the Tumkuru facility, the phase 1 and phase 2 of the facility is complete.
Yeah.
And so the utilization, will there be an additional overhead or some cost element which we'll get to see this year, or do you feel that's manageable?
No, this is a CapEx that we have already included in this one, accounting.
Right. But
utilization
of the facilities, it doesn't look like it's picking up in a medium term. So that will have some margin impact, or no? That is manageable.
No, it won't have a margin impact, but we are hoping that it will be utilized very soon. In fact, the first helicopter fly out from there is going to happen in July.
Okay.
The full utilization of the capacity that we have in the phase 1 and 2 that we have created, that is for 30 helicopters, will depend on the speed at which the orders are placed for LUH.
Right. But for FY 22-23 in general, the utilization of facilities is not a concern as per you. I mean, I think the order book is running out for manufacturing, whereas the capacities are all sort of in place. So do you see any sort of risk of utilization impacting margins a bit over 22-23, not only in Tumkuru but overall in Nashik, maybe Bangalore, all put together?
No, not really to that extent. Yes, if it comes down further, that it should be a matter of concern for us. But we are alternately using the capacities in terms of ROH, that repair and overall. So in case where there is Nashik, there is the pending orders less, we are utilizing every facilities that we have for the repair and overall. So like that in all other places. So Tumkuru facilities is set up on time. Of course, the orders are slightly delayed, but it should not affect my margins as far as we are concerned, because there is deployment of manpower and our resources are minimal till such time that we start the operations.
Okay. Got it. Okay. Thanks. That's all from my side.
Thank you. That was the last question. I would now like to hand the floor back to the management for closing comments.
Thank you for joining us today for this analyst meet. So hopefully we have tried to answer all your questions, and I'm sure that if it's to your liking and probably your following as far as the next year's production is concerned. We do have little bit concerns regarding the delays in the order placement, but it should not affect us as far as the short-term revenue generation is concerned. We will be able to meet that in this year and for the coming years. So I'm sure that before we meet next time, we'll have something more positive to add to this story of ours. Thank you for joining us.
Thank you, members of the management. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.